I've taken my digital pen. Welcome to our revision class of FSLC, Financial Statements of Limited Companies, AAT Level 4. Okay. Now, at some points, I might sneeze, so excuse me for that in advance. And hey, oh, let me check you. Some people have joined, so if you have joined now, you can say hello and good morning. So I can see who has joined. Level 4, Professional Diploma, FSLC. Thank you, Ali. Yeah, I'm good. Nothing wrong with me. It's just nose blowing. And I hope the lesson goes well. Today is a very important day. Good morning, Mika. Good to see you. We have covered all the chapters, people. Yeah, all the 11 chapters. And from these 11 chapters, today's the revision day. So what I'm going to talk about today is the exam technique. Yeah, how are you going to do the exam? What are you going to do in the exam, even day before the exam, night before the exam? On the exam day, what do you do? And how do you prepare? And then you pass your exam. Okay, we are using world-class BPP course notes. And today you're going to do one mock exam, exactly the similar type of question you can expect in your real exam day. So it's a revision day. Your exam is 2.5 hours, means 2 hours 30 minutes. 2 hours 30 minutes. How many minutes are there? 60 plus 60 plus 30. 150, right? 150 hours that minutes are there. Within these 150 minutes, you need to finish your exam. It's a computer-based exam, but partly computer marked and partly human marked. The real teacher will be marking the theoretical part. Yeah, practical part mostly computerized. Theoretical would be marked by the teacher, one of the teachers, examiners, all those people. Not the examiner can say the question. Yeah, and there's teachers, like different teachers are there. They apply for the marking and they do the marking, but very little. The good thing here is mostly computerized mark. 70% you need to get to pass in the exam. And how many tasks are there? You need to complete 8 tasks. How many tasks? 8 tasks. And what are the tasks? Let's check it out. These are the tasks. Task number 1 and 2 is basically your financial statements. SOFP could be SOFP, SPL, and cash flow. Serve cash flow. Out of these 3, you need to 2 questions gonna come, which is task number 1 and 2 for 40 marks. Right? 1 and 2. Task number 3 and 4 is a theoretical written question, theoretical question from the IFRSs and the ISS. Yeah, framework and ethics as well. All right. Number 5, it could be any chapter apart from the interpretation for 15 marks. Again, IFRS could come, some calculations question comes in, a little bit of IFRS calculation, multiple choice question comes. Number 6 is another big question, big topic, group accounts, which I've done in over the chapter 9 and 10. SPL, SOFP both comes of your group accounts. Number 7 and 8, look at this, 7 for 20 marks, 8 for 23 marks. Both of these comes from last chapter, chapter number 11. interpretation, ratio analysis, easy chapter. This is going to be easy, but task number 8 is all about writing. It's a written question. Yeah. Task number 7 is about calculation. Task number 8 is about writing. Those you have calculated, or they might give you a new scenario. Based on the scenario, you need to tell whether your business is doing good or bad, or any other comparison of the businesses. Well, so these are the things we're going to do. 8 tasks we're going to do, which is today. I'm expecting few more students to join in, but to be very honest with you, as I said, I cannot afford more times. Little more exam technique. These are the things you can expect. So before you go to exam, make sure you know the order. What comes in question number 1, what comes in question number 2, 3, 4, 5, 6, 7, and 8. Yep. Well, how many marks are there altogether? Look at this. Okay, hold on. No, I need that, but not now. Okay, I'm taking my calculator on the screen. Yeah, Hakan, thank you. Okay, I need your participation today as well. Look at this. Task number 1, how many? 40 marks, yeah? Task number 1 and 2, basically. Task number 3 and 4, 22 plus 22 plus. Task number 5 is 15 plus. Task number 6 is 30 plus. 7 is 20 and 8 is 23. How many marks together? 150. How many minutes you have to finish these 8 tasks? This 150. You have 2.5 hours, 2.5 hours. That means 150 minutes you have. So it's very easy calculation. 1 minute for each mark. Yeah. 1 minute for each mark. That should be in your head. Level 4, time pressure exams. Yeah. Because so many calculations you got to do, lots of writings you got to do. So it's a time pressure exam. Thank you, Hakan, for little extra mile. If you do 70% of it, you get 105. So that was a calculation from Hakan. He says like, oh, then we need to get 105 to pass it. If we aim for 105, you will fail. Yeah. You shouldn't aim for 105. Rather, minimum is 80% you should aim for, isn't it? 80% you should aim for. 120 is a must. Above that, you are safe. Margin of safety you might have learned in level 3. Also level 4, management accounting. Budgeting, controlling, could be. Well, so don't aim for the 70%, 80 plus, right? Okay, these are a little bit exam talkie. Before the exam night, obviously you're going to practice throughout the week to this week, all the weeks until exams. You got to practice minimum 5 mock exams, 2 from your my AAT, all the green light tests, and 1 I gave you, 1 more I will give you on the email from BPP. So how many? 4 already. A couple of more you can find, or even 3 you can find from the BPP question bank. Please get the question bank ASAP if you did not have it. Okay. And from the question bank, practice more. So 5, 6 mock exams going to help you. When you're going to do the mock exams, minimum 2 to 3 mock exams you should do under exam condition without looking any help. No, with time constraint, time at your hand. Yeah, don't worry. Hakan says there are 5 in the book. Yes, there are 2. You can 1 more you can get from the AAT website. So 6, and 1 more I'm going to give you 1 extra. So 7 in fact. Well, so you should practice it without looking at any help, time constraint, like at a timely manner. Yeah, when you're at home. Then you need to judge yourself. Am I getting 80% or not without any help? And am I finishing on time or not? If you are, you're safe. If you're not, there's something problem. You must take good preparation. You must finish the whole book 1 more time with all the test your learning and activities. You must finish the exam kit or question bank we call for BPP, question bank. 5 mock exams, you're ready, you're done, you're going to pass, all right? Night before exam, take plenty of rest. Obviously, preparation will be there as well. Write and prepare yourself, yeah? Not write in a pen and paper, write with pen and paper. Make yourself familiarized with the computerized formats from your My AAT. And on the exam day, make sure you sit in a good computer. You know the keyboard is good. You bring the calculator you trust, not anything random new calculator, and keep some pages on your hand handy to do some workings, right? Well, these are the introductory talkie of our revision. And I had the core talkie as well, that what comes in the exam, what you can expect, yeah? And how many marks are there, what are the times. And I believe these are enough for the exam preparation. Like, oh, that's how you approach your exam. Yeah. Now it's time to do a revision. Revision is basically you're going to do 1 mock exam, which I already sent you in your email. So people, write me back something. Are you ready to start? We're going to start. Yeah, write me something. And my camera will be off definitely. Yes, Charlotte, Vivian, Zivil, Mary, Mika, Hakan, Abby, Rabia. Who else? Come on. I know you are there, Mithaili. Come on. Don't be lazy. Yeah, you got to participate throughout the lecture. Yeah. Okay, that's superb, Sylvia. Thank you. So just before I start lecture breakdown, today I'm going to do 1 full mock exam. There are 8 tasks. So it's almost 10:15 or 13 past 10. So let's assume 10:15 till 11:30, like unless our break. We're going to practice as much as we can. Maybe until 5 questions, definitely we can practice. Yeah, 5, even more than that. Could be 1, 2, 3, 4, 5. Then 11:30 till 12 o'clock, we're going to have our break. And then 12 till 1 o'clock is our rest of the all the other tasks, 8 tasks we're going to do. Okay, that's great. And with that note, if you have already printed that out, you can keep it with you. If it is not, I'm going to share the screen anyway. The screen is shared here with you. And we're starting a mock exam for 19, 20, 21 as well. No matter, it's all same. So don't worry, these are the latest. So there will be 8 tasks, starting with task number 1 and 2. So what are you going to expect in task number 1 and 2? I'm taking you in that matter again here in the page. Task number 1 and 2 is about SOFP, SPL, and cash flow. Now, they can give you either of choices. In this mock, we don't have the cash flow, SOFP, SPL. Other exams, cash flow can come. So you need to master yourself all over. All right. So the 2 questions, you are aiming for 40 marks. I know all of you can gain 100% marks here. Full 100%. And the same I expect today from you people. All right. So if this is a question, before you start reading anything, you know, this is a trial balance. So you don't need to give a good check. Just I'm checking in 1 minute. I have some further information I would be reading, and quite a lot. Then I have I'm going to read now this one. Then I might have, I can see it's a SPL. Just in 1 minute, I'm checking everything. So this you should do. I have a few workings for stock sales, distribution, admin costs. Then I have got task 2. So I don't need to go to task 2 because task 2 will be separate. Although the same information can be brought down in task 2, but these will be repeated for you. So It is independent, each task. Yep. So in my task 1, I can see trial balance is there. Some further information is given. And I meant to do an SPL. Now let's read the question. You have been asked to help prepare the financial statements of Rover Limited for the year ended 30th September 2011. Very, very important. Year ended 30th September, that means year started 1st of October 2010. Trial balance 30th September 2011 given. Trial balance 30th September 2011 given. Now, before I go into the trial balance, I know this is all about debit credit. I'd like to go to the requirement again. So that's you. I'm going into the requirement. They're saying draft SPL, statement of profit and loss and other comprehensive income for Rover Limited for the year ending 31st December 2011. So this is the year end we're doing it. Yeah, 31st December 2011. Then they said something, you don't need to use the workings to achieve full marks on the task, but the data in the workings will be considered if you make errors in the pro forma. In short, working is very important. We must show our workings in the working boxes. All right, we're going to do anyway. Even if we need extra workings, we're going to do in our pen and paper. You'll be asked to draft a statement of financial position in task 2 using the same data. Oh, that's so good then. They are telling us SOFP, we will have to do it in task number 2. So with the same data and information, that's really good. Before I read the further information is all you need to master. Yeah, further information is the key thing. Before I read that, I'd like to go quickly over the trial balance. So I have interest, distribution cost, admin expense, all these are expenses, debit. Receivables, current asset, debit. Payables, current liability. Interim dividend and even final dividend all goes into the statement of changes in equity if you meant to do. Statement of changes in equity into the retained earnings. Share capital goes into equity. Revenue, in your SPL, long-term liability is their loan, 8% debenture. I can say 8% is the interest. Plant and equipment, the cost, but the accumulated debris must be given here, somewhere bottom here. Normally they gave you just right after, but here they give you somewhere at the bottom. Okay, no matter, not a problem. Accumulated. This is task 2 for purchase. Purchase is SPL, definitely. Cash, retained earnings, inventory. This is opening inventory. Agree with me, yeah? Opening inventory. In this task, you got to take into account other cost of sales. Share premium. Then, the accumulated debris, as I said. Final dividend is there. So this is to deal with retained earning or statement changes in equity if you meant to do. Land and building at cost. And revaluation reserve, you have, just keep it in your head, revaluation reserve. These are all SOFP, even land and building accumulated debris, that is also statement of financial position, right? Statement of financial position. So I hope you already know what goes into the SPL. If I ask you true or false, I'm asking you a true or false exam question. In your SPL, not SOFP, in your SPL, you record income and expenses. Income and expenses only. What do you say with that? Income and expenses only. Definitely true. Definitely true. Thank you, everybody. Yeah. And all your assets, liability, capital, drawings, not drawings, dividend, share capital and equity, all those things you record in your SOF. That's it. So I hope you're good in the trial balance. Now let's check the further information. I'd like to share one very important talkie regarding the trial balance, further information. Still the nose blowing, yeah? I'm using loads of tissue, as I said, all around. Okay. All right. So further information, it hits twice. It hits twice. What do you mean by hits twice? Is it a car that hitting another car? No. It hits twice means you need to treat it 2 times. You need to treat it 2 times. I'll just share one example with you. Rest gonna make sense, and I will show you maybe options I'm giving you. Let's talk about this inventory, 30th September 2011. This is our number 1. What do you call it? Task, further information number 1. Let me mute everybody. Yeah. Okay, you people are mute. Okay. So, okay. Let me put the camera off anyway. Yeah, you can put your cameras off. Don't worry. Okay, what I was talking about is every further information you need to treat twice, maybe once into the SPL, once into the SOFP. This is how I call it twice, or could be twice into the SPL or twice into the SOFP. Does it make sense, people? I will show you. Yeah. Further information you need to treat twice because these are adjustments. Adjustment needs to be treated. Needs to be taken into account twice. Now let's talk about this closing inventory. It goes into SPL once and SOFP once. How? Into the SPL you write under the cost of goods sold, don't you? Yeah. Opening inventory plus what do you call it? Purchase less cost of goods sold. Superb. Well done. And once into the SOFP as a current asset. You agree with me? Yeah, that's great. Even if I talk about the second one. Okay, let's talk about all the adjustments first. All the adjustment quickly, then we can work out later on. Yeah. Number 2, it goes twice as well. Once into the SPL, once into the SOFP. Thank you, those of you who are participating. Okay, SPL is under the, there's a box here. Tax, that is your tax, yeah, as an expense. And SOFP, it's a current liability. You agree with me? It's a current liability. Tax is a current liability, right? Great. We have third, what do you call it? Number 3, adjustment number 3, further information. Let's read it. It looks a big one, long one. Let's read it. It was noted shortly after the year end that one of the products made by the company was faulty. It has been decided that the product must be recalled at an estimated cost to the company. Oh, so that's an extra cost. Do you agree with me? Yeah, it's a faulty cost or goods, and if you do something here and you recall, it's going to cost you some extra money, 10,000. So extra cost. It's just a cost. Do remember, all of these products were sold prior to year. If you recall and work it out, so you need to spend this money. No adjustment have yet been made. So you have to do this adjustment, and you need to, at first you need to spend £10,000, number 1, which is your expense, and you haven't done yet, so you are liable to do it. You agree with me? Liable to do it. Yeah. Then they said the company classifies recall expenses as an admin expense. Means this 10,000 should be added with your existing admin expense. Let's check it out. We need to add this 10,000 here. That's SPL. In the SPL, you add with the expenses. But I said every further information should hit twice. Should hit twice. You need to treat it twice. No. Okay, Hakan, it could have been bank, but you didn't pay it from the bank. You didn't pay it from the bank. They never told us that, oh, money gone out from the bank. We haven't done it yet. We will do it. So it's a liability, okay? It's a current liability. So we are liable to pay it. So just keep it in your head. So if it is a liability, it goes into the SOFP. I hope you are understanding that, oh, 10,000 is added with the expense. That's definitely correct. Added with the expense, the admin expense. And it's a liability. We have to pay it. If we would have paid from cash or bank, our cash or bank would have been down. Hope it makes sense and easy. Number 3 gone. Number 4, interest on the long-term loan has been paid for 6 months for the year. No adjustment have been made for the interest due for the final 6 months. That means whatever is the interest, we paid only half, not the full. That means other half is due. Due is a liability. Do you agree with me? Due, expenses, interest due, expense due is a liability. That's one thing. And anything due, you need to add with the existing expense. So what is the interest? Interest 240. And what is the long-term liability? Look at this, £6,000. Yeah, 6,000, by the way, 6 million basically, but 6,000 we're going to talk about. 8% interest. Let's do it. 6,000. You can do it. You better do it. Times by 8 percentage. 480 is the interest, but we paid half of it. 240 basically. Can you see the 240 on the screen? Yeah, here's the 240 paid. Other 240 is due, and due is added. You agree with me? Closing due, accrued expenses is added. Yeah. So 240 you need to add into the SPL. You need to show the full amount as a due. So that is the treatment. As I said, every further information hits twice. Yeah, it's twice. Once it was liability, current liability is 240, and 240 is added with the existing interest. That is our interest. Another one is 1,500. Let's forget this 1,000 because we're going to do it anyway in 1,000. 1,500 revenue return. It's a sales return then. Revenue return are treated as a revenue. Wow. Revenue return, normally you take away from the revenue, don't you? Yeah. Normally you take away from the revenue. You should have been minus it from your sales. You should have minus from your sales, but you didn't minus, rather you added it as a sales. So can you feel the effect is double here? Yeah. Yes. The effect is double. You need to minus it twice. You need to minus it twice. And we assume it's a credit sales. We assume it's a credit sales. They never told us anything. So you need to minus 3,000 from your sales and minus 3,000 from your SLC or trade receivables. Where is the trade receivables? Okay. Here we go. Trade receivables. Minus it. 3,000 minus. And there is minus from the sales as well. Yeah, it's a sales return. It should have been minus at the first place, but we didn't minus, rather we added as a sales. So we need to minus it to make the effect 0. Then we put the original entry again. Okay, that's how you to see it is happening twice again. Now let's talk about depreciation. We have a big chapter on depreciation. You have learned depreciation level 3, level 4, different places. And I believe everybody knows what is a straight line. You do 10% on cost, don't you? And diminishing balance, you do 20% on what? Plant and equipment should be on diminishing balance, but you do on carrying amount. True or false? You drew on carrying amount. True or false for diminishing method? Definitely true. Yeah, carrying amount, also known as net book value. Yeah. Okay. How do you get the net book value? Cost minus accumulated depreciation. Okay, I believe everybody knows it. So depreciation charge for the year, we're going to do a big working for this. That goes into the SPL, and accumulated depreciation that goes into the SOFP. Just keep it in your head. Then you're going to do later on. Land. Remember, land does not have any depreciation, rather could be appreciation. Included in the trial balance value is 10,000. As I said, 30 I'm going to ignore. Land is 10,000. It's to be revalued 13,000. Wow. So 3,000 revaluation gain or loss? Tell me. 3,000 revaluation? Write me. Yeah, I got only one answer. Waiting for more. Oh, good. How can't Vivian Mary? All of you are right. Revaluation gain. Sure, you add with the existing revaluation reserve. Did you remember we have already a revaluation reserve? There we go. The arrow. Revaluation reserve. You need to add 3,000 here into the SOFP, and into the SPL. It goes under the other comprehensive income. You agree with me? Thank you, Abby, Mika, everybody, for your participation. Okay, that is the treatment of your revaluation reserve. But also just keep in your head that 10,000 is for land. Yeah. So let's go to the land and building. I'm highlighting for you. Land and building is 12,200. If 10,000 is for land, you agree with me that 2,200 is for building. Yes, 2,200 is for building. Just keep it in your head and write it down somewhere. 2,200 is building, and building has a depreciation, right? Not the land. Now they said land and building. I'm doing underline accumulated depreciation 220. That is for 2,200, right? Yeah. And land and building, they told us to do straight line, 10%. This 10% on what figure are we going to do? Not on the land figure, on the 2,200 we got to do. On the building figure, times by 10%, you get straight line every year is 220. Easy, already we're done. But let's do the plant and equipment depreciation. 20% they said plant and equipment on a diminishing balance method. So I'm taking another color pen just for this one. Plant and equipment, no? Yes, 16,641. Plant and equipment, 16,641. Do you do 20% on A? Of course not. You need to take away what? Accumulated depreciation, which is 3060, isn't it? Can someone do the work and give me a figure? Minus 3036 is, I don't know what, times by 20%. And you better do some work, yeah? I do as well. Let's see our works are good or not. We are doing all the workings. You got to do this type of working. Can you see it's so time consuming? Even I'm not sure whether I can finish every question today on time or not. I believe I can. Okay, 13,605 times by 20%. 2721. You agree with me? Thank you, Hakan. 2721. 2721 is the depreciation for plant. Thank you, Vivian. Yeah. And I showed you the working. This is the working. Cost minus accumulated depreciation times by 20%, 2721. Yep. Okay, that's great to do this type of works. Now, land does not have depreciation, rather it has a revaluation gain and should be added with the existing land. What else we have? Oh, we have done all the workings. To be very honest with you, we have done all the workings. Even for question number 1 and question number 2. Question number 1 and 2, both of it, we have done all the workings. Now let's do the work. Let's do the real question. So the real question is SPL. We're going to do this SPL. But before that, let's do some of the workings. Started with working number 1, cost of goods sold, opening inventory. You agree with me? Plus purchase. I believe these two going to be copy paste. Less closing inventory, which is given into the adjustment. Like opening inventory is how much? You can give me the figure or we can find it out. Yeah, found it. 6531, right? 6531. Now, for this type of question, I have something else to do. I remember. Yes. So this type of question, I'm gonna keep it on this side, left-hand side. I'm gonna use two of this. You might have seen me been using these things too. Like I do need two. Yeah. Okay. So why? Because it's gonna help me from that's the one. Opening inventory. Yeah. So I'm keeping your chatting box at the top somewhere. Opening inventory 6531. I'm writing it down. 6531. You can work together. We can work together. Plus purchase. How much is the purchase? Let's check it out. Purchase. Where is my purchase? Found it. 15,525. Yeah. 15,525. Thank you. Thank you for writing back to me. Less closing inventory. That is into the adjustment. I remember. That is 7878. Yeah. 7878. And that should be minus, shouldn't it? Yeah. Can someone give me the figure? Okay. Is it? Vivian says 14,178. Also, the Hakan. I'm taking your answer. Thank you, Mithaili. Lovely people. Saving my time and doing very wonderful in the lecture. So that is cost of sales. What is the distribution cost? I didn't see anything regarding distribution cost, no adjustment, but they gave us a box. I think, I don't know. Why did they give us a box? Distribution was 6852. I'll straight take away TB as per TB. TB means the trial balance. 6852. That's it. I don't have anything. But with admin, I do have, I remember. You remember the admin expenses, we already added 10 and the depreciation, I didn't read it, finishing the read here. One admin expense distribution should be allocated to admin expense depreciation. Sorry. We have calculated the depreciation. So let's work it out. As per TB, what is our admin? It's 3378, right? Write it down. 3378. We're only doing working still. TB, not P. TB. plus, the recall, product recall, 10 needs to be added, plus depreciation charge. Charge, I believe I have done it at the top here. So 1 is 220, I remember. Where did I do it? Here. You even gave me some figure, 27 something. Yeah, how much was the depreciation? 2941, I know, that's the added figure, but 220 is the figure for, what did we do it? Here is the one. Yeah, here is the one. 2,200 times by 10% is 220 for building. And for diminishing balance, you gave me a figure, some of you, which we have worked out here. It's 16,641. Yeah, see, so much work again and again, and it got to be concentrated all the time. Minus 3036, and then you did 20%. You remember? Yeah, 2721. I thought I have written it somewhere. 2721. 2721 is the depreciation on, what do you call it? Plant and equipment. So 220 plus 2721. 220 plus 2721. 2941. 2941. When you add all these three, what do you get? The total 2721 plus 220 is basically, okay, let me do it one more time. 3378 plus 10 plus, thank you people for writing back to me. And here we go. This is, what did I get? Oh my goodness. You said 6393, is it? Let me check it out. 3378. Obviously, it should not be that figure, but big figure. Plus 10 plus 2941. How much is that? 6329. Thank you, all of you, so for the good work that you have done. Well, that we need to write 6329. 6329. 6329. Our work is mostly done. Now we can finish our question, first one. Yeah, now we can finish our first question. I can make it bigger, no problem with that. Making it bigger now. Just putting it like this. Okay, so how much is the sales? We got to put the sales into the sales revenue. How much is the sales? There is nothing. It's just a copy paste. I think I still need this the same way, the way I was doing. Sales revenue is this 31710, but of that, did you remember we had to work out 3000 minus? You remember 31710. 31710 minus, the sales return was treated as sales 1500. That's why the effect is double. Yeah, that's how you got to do it. Rather, they should have given us a working for sales. Yeah, a working box. No problem. They didn't give us 31710 minus 3000 and 28710. Yeah, I hope you got the same answer. That's your sales, and you're getting marks for each of it. Yeah, and the cost of goods sold, we already found it. And how much was that? It's at the bottom here. Cost of goods sold was 14178. Do you agree with me? Yeah, 14178. Can you give me the gross profit? Sales less cost of goods sold equals to gross profit. What is the gross profit, people? Let's work it out. Vivian says 14532. 14. You agree with Vivian? 532. Thank you, Mary. Okay, when both of you or some of you write the same figure, that gives me full confidence, like, yeah, you're right. We're going to check the answer anyway at the end. What is this? Oh, I missed one box. Instead of sales here, I written at the top. That's why I like, basically the gross profit should be here. 14,532. Yep, gross profit should be here. Don't worry. It was just my bad. Why did they give us this one? Continuing operation. Do you have any income from the continuing operation? Nothing. They gave us this extra box just to confuse you. Don't make that, don't write it there. Yeah, line by line you got to write and you should get your answer. Okay, distribution cost. There was just straight down taken the distribution cost, which is 6852. taking it 6852. Admin expenses, we have worked it out, and from the bottom, where's that admin expenses is 6329. Yeah, 6329. 6329. So this should be taken away from the gross profit to get profit or loss from operations. So do you get profit or loss? 1351, that's a profit. Yeah, Mithaili, Mary, Vivian, 1351. I hope that is a profit, yes. Okay, and Hakan says as well, if it is a negative, then it would have been a minus, because it's, now let me release it, it's positive. We have a profit from operation. Now, finance cost, just take it away. How much is your finance cost? Do you remember? Interest. Finance cost is the interest. So interest is 240 given, but would it be 240? We have added, thank you everybody, 240 plus 240 was added because it was not paid. It was accrued, 480. Take away, what is the profit before tax? Give me that figure, please, someone. 871, thank you, everybody. Thanks for your good work. So many of you are writing back to me, Mithaili, Jesse, Hakan, Vivian, 871. And then tax. Tax is given at the bottom, you remember? Let's check it out. How much is the tax? It's 1920, agree with me. 1920. Take away, how much is the, oh, it's going to be a loss then. 1920 is a bigger figure than A781. Profit or loss, it's a loss going to be, isn't it? How much is the loss, by the way? 1049? 1049. It's a big loss. That's not a good thing. Okay. Okay. That's superb. So far, all done. But again, on property revaluation or valuation, how much it should be? Tell me. We have worked it out. Vivian says 3,000. Do you agree with Vivian? Yeah. Hakan says as well. Of course, we have no other option than agreeing with you people. You are very beautiful, lovely people, because you have checked it out. Land from 10,000, it become 13,000. That means 3,000 has revaluation gain. I need to write it down here. Now, ultimately, total comprehensive income is for the period is going to be positive. How much it is? 1951. Thank you. Do you agree with Hakan? It's 1951. Thank you, Mithaili, Vivian, everybody. Boom. We have done it. We have done our work. It's time to check the work now. It's time to check the work. If your last one is done, all right, everything is right. So let's check it from here. I open the answer solution. I gave you the solution. Well done. That is definitely right. All right. Look at this. There is no, what do you call it? Distribution. I don't know why did they give you the distribution, but anyway, that's super work from you people. You got a full marks from task number 1. Now I'm going to do the task number 2. Moving on to the task number 2. You have been asked to prepare the financial statements, to help prepare the financial statements, Rover Limited, trial balance given. Okay, we know this trial balance very well. Even the further information are as it is copy paste. We don't need to read it twice. But what are you meant to do? Draft statement of financial position, SOFP. Statement of financial position. Now let's check the, what do you call it? What is given? Balance sheet given, I can see. Statement of financial position given. Asset liability we're going to do. We know what to do here. But workings, yeah, there we go. Property, plant, and equipment. We have done already a little bit of workings. But here we need a big workings. Okay? Here we need a big workings for that one. Then trade and other receivables. You know, from trade receivables, you need to take away the sales or recall. Just do remember that one, minus recall. Sorry, not the recall, sales return. Sales return. Sales return. It was treated as sales. So we need to take care from sales, need to take care from sales return, trade receivables. So the sales return was 1,500, but would be doubled, times by 2, 3,000 should be taken away. Retained earnings. Do you remember the retained earnings? Yeah. You have to do the retained earnings, opening retained earnings, plus profit for the year, less dividend paid. Yeah. So that's what we're going to do here. Opening retained profit less dividend. Okay, just stay tuned here. Revaluation reserve. We have done it. Now we can show you here. How much is your revaluation reserve? It was 3,000, we know. Yeah, it was 3,000, but the presentation, if you are meant to show here for the revaluation reserve, you can say value at the beginning, value at opening balance, we call it, was 10,000. At the end, closing valuation has gone up 13,000. So that's, we already got it. So we can do it. Now trade payables, trade, not just trade, it is other payable. It is other payable as well. So do you remember, whatever is your trade payables from trial balance, you're going to take it out, but you have to pay the recall, the 10, you remember? Yeah, product recall. You know, there was a product, faulty product, you need to pay £10. You didn't pay from your cash or bank, you are liable. That's why it's a liability. Also, interest was your liability. Interest to 40, which you half yearly interest was due. So we got to do these things. All right. Okay, then let's finish the payables as part TB, trial balance. How much is in the trial balance? Now I'd like to do it this way. My trial balance, I can go here, trade payables, where is that? How much? You can give me the answer. Trade payables, I got it here. 2363. Yeah, 2363. Thank you for giving me that answer. Okay, 1 minute. 2363. Can you work it out? 2363 is my trade payables. 2363 plus I'm still liable by 10 for the recall, plus I'm liable for the interest. It's 2613. You agree with me? Thank you, everybody. 2613. Okay, that's done. And what else is we have? Retained earnings. We're going to do trade receivables. Trade receivables, I can do it now. You know, how much is the trade receivables as per trial balance? As per trial balance, here we go. 5455. Yeah, is that, isn't it? 5455. Yes, 5455 less sales return error of correction. Sales return error of correction. How much is that? 3,000, isn't it? If you take away how much, what do you get? Concise 2455. Yes, I agree with you. Normally I don't do mental maths. I discourage you to do mental maths on the exam day. Use your calculator. So it's 2455. Come on, it's 5 and 5. Okay. Now we got to do the property, plant and equipment. Property, plant and equipment. That is the depreciation, accumulated depreciation, everything you got to do. Let's try to fit everything in. These boxes are not enough, I believe. But what is the cost of it? Cost of your PPE, property, plant and equipment, not just plant and equipment plus property. Property means your land and building as well. So on the right hand side, plant at cost 16,641. Yeah, 16,641. That is my cost of the plant. Then land and building. Land and building, we have a cost of 1220 plus 12,200, not 20, 12,200. Give me the added up figure. Yeah, 28841. Thank you, people. Fantastic. Okay, I'm not working them. 28841. Okay, that is my cost. Less accumulated debris, which is given. You can see it. There is one accumulated debris. For plant and equipment, 3036, and 14220, you remember? For land and building, basically that's for building, 220. How much is the accumulated depreciation added up figure? 3036 plus 220 is how much? Give me someone figure. I'm adding up the accumulated debris. 3036 plus 220, 3256. Thank you. 3256. If you take away from cost minus accumulated debris, what you get is net book value or carrying amount. Yeah. Vivian and Hakan, they both of them are saying that it is 25585. I'm taking your answer. 25585. Now that is accumulated depreciation. What is the depreciation charge for the year? Depreciation charge, we already found it. I remember it's 2941. Depre charge. Depre 2941. You remember? Yeah, it was 224 building and other for this, what do you call it? Plant and equipment. 2941. I'm taking you to the SPL. Yeah. SPL. We have done our SPL. There we go. That is the depreciation charge. 2941. That's been taken. So Hakan says, once you take away the debris, it's 22644. Can you do the work, other people as well? Vivian says as well. Thank you, Vivian. So I can take your work confidently here in this, where I'm doing? Here, yeah. So 22644. 22644 is the closing value should have been closing carrying amount. But you know, there was a revaluation in the land. You see, revaluation, and then the value gone up by 3,000. That 3,000 should be added. That 3,000 should be added. Now, that's why I was wondering, one box is less here. This two added up, you should get the value, end value of your cost. Because, you know, in the box I have seen, there's only non-current asset, one box given. So I need the end answer. Cost plus anything bought, plus any revaluation, less any depreciation. So I need the end answer here, which is 22644. 22644 plus, yeah, thank you. That should be 25 plus 3,000 is 25644. Thank you, everybody. 25644. Now, in the question, you can save one extra place here, like, you know, the depreciation charge I did separately. You can put that into the accumulated depreciation, just adding up. So we can save one extra space and we can fit in it. That's the only option I can see, no other option. 25644 should go to the balance sheet or SOFP. Okay, it should go to the SOFP. Let's write it down then. We can start our SOFP now. Non-current asset, PPE, property, plant, and equipment. And the figure on screen I can see, since you people have worked it out in the chatting option, 25644. These are all in 000,000, number one. Number two, in the current asset, you can take quite a few items like closing inventory, trade receivable, cash, bank, all the items. Obviously, we do have a closing inventory, closing inventory. What is the figure? This is the figure, 7878. Agree with me, yeah? 7878. Then trade receivable we have, you remember, and we have worked it out. What is the figure at the end of our trade receivables? Where is that? Trade receivable 26. It's just that's payable. No, where is that? 2655. Thank you. 2455. Sorry, 2455. Yeah, 2455. Thank you. You see, we have worked it out. 2455. Yeah, this is a little messy though, but it is 2455. Yeah, from 5455 we take it 3,000. It's 2455. Let's write it down. Trade receivables 2455. We have our maybe cash and cash equivalent. Yeah, there we go on the right hand side. 304. You see, just copy paste 304. Cash and cash equivalent. We don't have any bank. No bank overdraft either. Okay, don't bother about it. And I would say we can keep it like this. Now, you know, there are two boxes. Look at this. This is one box. This is another box. This is the box added up of all of it. Yeah. 7,000, 2,004, 7878 plus 2455 plus 304. Add up, please. Give me the figure for that. How much is 7878? Nice figure, by the way. 2455 plus 304. 10637. Thank you, Mitheli, Mary, Vivian. 10637. 10637. Okay, and what is the total asset, by the way? Current asset plus non-current asset, right? Should be added the top one, 25,644 plus 25,644. It's 36,281. Am I right? 36,281. Thank you, Vivian, Hakan, Mary. 36,281. Now, that's your total asset. This should equal to your total equity and liability. Yeah, here or there, wherever you do. Right? Let's do that part as well. Equity. Obviously, there will be share capital, share premium. I have seen it. Revaluation reserve. We have a rev-res, I call it. Retained earnings. We need to work it out. Yeah. Let's see how many workings left. We have worked out property, plant, equipment, receivables. We have worked out retained earnings. Okay, let's work it out now. Retained earnings. I'm going to start with opening RE plus profit for the year. And let's closing RE. Now, do you have a profit here? Oh, no, not closing RE. There is a dividend as well. Plus or minus could be profit or loss. Less dividend. Now, dividend, whether interim or final, all of it should be taken away. I have seen there is interim, final, both. Retained earnings. Where do you get the opening retained earnings from? From your trial balance. Look at the right-hand side, purple color I'm doing. I'm checking, in fact. Where's the retained earning? It should be somewhere at the bottom. Where is that? Retained, I got it here. 8197. Retained earnings is owner's equity. That's why it's credit. 8197. Yeah. So 8197. Do you have a profit or loss? We have a loss, big loss. We have worked it out. How much is the loss? We have a loss of 1049. You see, 1049. Thank you. 1049. That loss should be taken away from your existing profit or reserve. Retained earning is a reserve, existing reserve, profit reserve. Yeah. So 1049 should be taken away. And then dividend. There are a couple of dividend I have seen it. Look at the right hand side. Interim dividend 300, and there is a final dividend somewhere I have seen it. Where is that? In the final dividend. There you go. 100. Yeah. I just circled 300 and 100. So dividend is 400. Interim final, no matter. So can you please add up? What is the Hakan says 6748. Agree with Hakan. 67. Thank you, Mitheli. 6748. That means thank you, Vivian. 6748. Let's take it into the. We found a 6748 before I forget. 6748. Yep. Well, that is what is your retained earnings. Revaluation reserve has gone up, you remember. Let's check it out. On the right hand side, revaluation reserve. Look at this. I'm doing this 2000 plus 3000, isn't it? It has gone up. Res is 2000 into the trial balance plus 3000, right? So it is 5000 without any doubt. Share premium is how much on the credit side? You need to look at it. There's the one, 2000. Yeah. Share premium is £2,000, and share capital is how much? That is given on the credit side as well. Where is that? Ordinary share capital. There we go. That's your 12,000. Yeah. Ordinary share capital is 12,000. Now, share capital, share premium, revaluation reserve, retained earnings, all of it is done. We can add up together. Let's get the figure here. Well done. Lovely people are working. Vivian and Hakan. Thank you. Thank you very much. 25748. And I hope everybody agrees with them. That is my equity. Thank you, Mary. Non-current liability. We know we have a debenture, 8% debenture. Oh, where is that? There we go. £6,000. That is our non-current liability, £6,000. And current liability, we have a trade payables. I've seen it. We have in fact worked it out. We have working for them, and not receivables. It's trade payables, yeah. And we trade and other payables basically. And you know the taxation. Tax is the liability, you said. So tax is how much? 70? No. Tax is 1920. Yeah, I'm writing that easy one first. 1920. That is the tax. And trade and other payables, we have worked it out. Let's check it out from the bottom. Where are you? Here it is. 2613. See? 2613. Trade payables. 2613. Do you have anything else like bank overdraft, something like that? Anything? Not actually. Yeah. By the way, total liability. What? This is horrendous. From if you add these two, you can get the what do you call it? 4533. I'm taking people's answer. 4533 is the total current liability, and when this current liability and non-current liability, you get total liability, which is 10,533, isn't it? 10,533. Well, now when you add this with the equity, what do you get? Do you get equals to total asset? Oh, your total asset was how much? 36281. Do you get 36281? Like 25,748 plus 10,533. No, you don't get. Come on, let me add up. Yes. Oh, he says yes. Let's add up. Equity is 25,748 plus liabilities are 10,533. 36,281 is our, yeah, that is. Look at this. 36,281. That's all you need to write here. 36,281. If it balances, you can dance on the exam day. Or you can, where are my tissue boxes? Well, so yeah, you can dance like woo, boom, boom, boom. It took me a long time, by the way. We got to go faster with the other stuff because it has balanced. I don't need to check the balance sheet answer, but that's definitely correct. It's 36281. It's definitely correct. Yeah, you can move ahead, but still my suggestion, keep some time to check it, recheck the whole of your question. All right. Great. Moving on to the next question. So you have got fully 40 marks. Nobody can stop you in getting these 40 marks. Get the full 40 marks and be happy. Task number 3 and 4 we're going to do now is going to be an easy task. These are theory tasks and for 22 marks. Yeah, both of these 3 and 4 for 22 marks. Well, let's move on. It looks like, okay. Okay, task number 3. Look at this. In this question, basically, they gave you the options of the answer, but it will not be like that. They said in the real exam, this will be fully written. Written means only this much will be given. They'll ask you which of the following, not even which of the, what are the duties of the director? Am I understood? What are the duties of the directors? What are the duties of the directors? Then you need to write. Okay, people? It's not like you need to choose and pick. You need to write. But yeah, we can save little time here. Make sure you need to write in the exam in a blank piece of paper. Let's assume task 4, task 3. It is given, and you need to get started writing the what do you call it, answers. Obviously, the answers are given in your book. You must revise and memorize. Let's check it out. Keeping proper accounting records, definitely, without any doubt. This is the duty of directors. Then they said setting appropriate salaries for the various members. Now, this is the duty of remuneration committee. Remuneration, if you have any. This is not the duty of the board of the directors. Preparing company's annual financial statements, definitely finance director is responsible, or the directors are responsible to not just prepare, and auditing as well. The other one, having the financial statements audited. Yes. If the company is of a certain size, yeah, you need, if it's a public limited company, by law, you need to do the auditing, and you need to keep the records as well. Holding discussion on various elements of the financial, no, this is not written into the duties of your director. So in the book, you have all this written. Please check it out, read it and write it, try to memorize it. Presenting the financial statements to the shareholder in the general meeting, annual general meeting, AGM, answer is yes, definitely. That's the duty of the shareholder directors, not the shareholders. Filing the financial statements with a registered company's house, basically. Company's house. What do you think? Let's not giving me from my side only. Yes, definitely. Thank you. Filing the financial statements is definitely their duty. They have to do it. Ensuring the accounts are filed with the register of companies within the prescribed period after the year end. What did they say again? Let me read one more time. Ensuring the accounts are filed with the register. Definitely they got to do it within the prescribed period after the, okay, deadline means meeting the deadline. Deadline. Yeah, definitely, isn't it? Definitely. Thank you. And the last one is corresponding with HMRC regarding the tax liability calculated in the financial. No, definitely not. It is not their duty. Yeah, they need to submit the statements, and based on that, the tax liability is already computed there. They don't need to do corresponding in the HMRC. Super duper, well done. Let's see who can give me some of the definition. The conceptual framework lists various measurement bases that are acceptable. Please list the basis and define it. Now, present value. Tell me something, any keyword. The examiner will be looking for the keyword. Yeah. If I'm marking your script, I'll be looking for the keyword. What is the keyword for present value? Is that? Write me, please. Yeah, fantastic. Fantastic, Vivian. Discounted value of what? Future cash flow. That is your PV. Discounted value of future cash flow. Okay, present value of future cash flow. Yes, Sylvia, but you need to do the discounting, don't you? By doing the discounting, you need to bring it down to today's value. That's superb. Historic cost. Write me something. Historic cost. I know everybody knows it. Whenever you buy a non-current asset, you need to write it as a historic cost value. But how would you define it? Okay, cost at which the asset was fantastic, Sylvia. I agree with you. That's a superb words. Price paid for the asset, Mary. You're right as well. But even if you copy the answer from Sylvia, yeah, in the past, yeah, cost at which the asset was bought for. Yeah, cost the asset was bought for or paid, acquired for, whatever you write. Yeah. That is the historical cost. Like when you 4 years ago, 5 years ago, 15 years ago, you bought it, you paid that money. We're going to check the answer in a minute. Current cost. What do you think about the current cost? Write me anything. Do some little brainstorming. Don't worry about getting it wrong. What do you think? Current cost of replacement at which we can buy the new asset. Replacement cost. No, keep it simple, yeah, Sylvia or everybody. Yeah, today's value, Abby. I'd take your answer. Today's value means like how much we would pay now. That's it. How much we would pay now, today, now. Yeah, that is the current value, basically, Jesse. Today's value, Abby, yeah. Now or today's value. It's the same thing. Realizable value. Okay, what do you mean by realizable value? Write me something. Realizable value. How much you can get it for asset by, just add one more word or two, Mary. How much you can get it for sale? By selling it. By selling it, how much you can get it? That is called realizable value. How much you can realize, basically. By selling the item, how much we can get? we can get. Yeah, today, of course, today, if we sell it, how much we can realize it. Also call it settled. Let's check the answers now. Let me make it a little bigger. Keeping proper records, definitely. Company's annual financial statements, preparing, having the financial statements audited, presenting into the AGM, filing with the company's house, ensuring that the filed with register on time. Yeah. Now look at this present value, discounted value of future cash flow related to the transaction. Yeah, definitely. Historic cost, the amount that was paid at the transaction. Yeah, exactly. Current cost, the amount that would be paid if the transaction occurred today. Oh, that's a nice way they have written. We can follow this one, and whatever we have said is correct as well. Realizable value, the amount would be obtained, was realized, means sold or settled. Yeah, how much we can get it today by selling the asset. Super duper, well done. That is your 3. And look at the 4 now, because 3 and 4, both of these are your, what do you call them, theoretical questions. So you need to write it down in full. If they're saying it here, in the real exam, you'll be fully written, will be human mark. One of the teachers will mark it. There will not be any drop-down boxes. That's great. But what is the question? The question is define event after the reporting period. Current cost and realizable cost. A current cost is the selling price, basically. New item. Okay, there was a question from Jesse. Current cost, current price. Yeah, and selling a realizable value means you already have an old asset. By selling it, how much you can realize it for. Yeah, that is called realizable value. I hope it makes sense. Anyway, moving on. Define an event after the reporting period. So they have given you quite a few options. You need to choose the correct, but basically not in the exam like this. You need to write it. Number B, distinguish between the event after reporting period, adjusting event and non-adjusting event. Yeah, IS 10 basically you're talking about. Adjusting event and non-adjusting event. So you need to describe, write it down in your own words. All right. Okay. And number C, explain the treatment of the losses arose from the fire on the company's premises of 21st October 2008. So there might be some scenario in number C. And there's D as well, another scenario. Okay, people, so stay focused. Let's do it together. Task number 4. The following events took place. Lucky PLC, the company. Before I read anything, let me tell you about the events after the reporting period is IAS 10. And any event that takes place from the date of SOFP or financial statements date. From the date of SOFP, unless it is get approved from the directors, from this date, remember, until that date, any transactions occur, these are events after the reporting period. Now, these transactions could be adjusting, could be non-adjusting. Adjusting events that occur within on the date of financial period, and you didn't adjust it. You need to adjust. A non-adjusting period, the condition that does not exist on the date of the reporting period, but it occurred later on. Yep. Just keep it in your head. Life would be easy in doing any or many of the questions. Okay. Reading it. The following events took place. Lucky PLC, a company with the 30th September 2019 year end. Two transactions. On 21st October 2019, remember the year end is 30th September, but it is happening, looks like 21st October. There was a fire, the company's premises destroyed fixed asset and inventory. The losses from the amount was this, and they were not covered by the company's insurance, so it's a big loss. Considered the amount is considered by the directors to constitute a material loss. Okay, so what do you think? Is this an adjusting event or non-adjusting event? According to my definition earlier I gave you, adjusting or non-adjusting. Generally, fire, losses, these are adjusting. Dividend is not an adjusting, but the date is very important here. In AAT, it is treated slightly differently. They expect you that it should happen at least on the day of the financial position. So on that note, this will be a non-adjusting event. because it is taking place 21st October. See, I was getting a mixed answer, but you just need to keep in your head, did it happen on the SOFP date? No, it happened afterward. You don't need to, but you need to write a note. Let me tell you one thing. This is for, I don't know, in the AAT, they expect you like this way. But for my ACCA students and exams, I would have treated it as an adjusting event. Yeah, but don't worry. This is, if it happens on the SOFP date, adjusting. If it has happened after that date, non-adjusting event. Keep it simple like this. Okay. All right. This is non-adjusting event, but because it's a material loss, you need to write into the notes, director's notes, number one. Number two, on 3rd October 2019, the company declared the final dividend. It is definitely taking place after the year end. After the year end, and dividend is always non-adjusting. Okay, dividend is non-adjusting. So without any doubt, this is clearly non-adjusting. Keep it in your head, please. Now, these things we're going to deal with in number C and D, as I saw in the bottom. But before doing these two things, let's go over A. Define an event of the reporting period. 1, 2, 3, 4 options given. Read and get the right option. Which one you think is the best option? I'm taking little rest. You can read in between and give me the best option. What is the best definition of events after reporting period? Okay, I'm getting some answers already. Haha, I'm getting very different answers now. Okay. 1 more minute, I will be waiting for the answers from few of you. Okay, we need a little discussion maybe here. Okay, let me explain. Let's read then. Okay, favorable, unfavorable, any could be. Yeah, mostly these are unfavorable. It could be favorable as well. You might be gaining something. Event that occurs between the year and date. That's definitely correct. Year and date, and the date when the financial statements are published. No, did I say published here? Look, even I said it here. Look, I'm erasing some of the items, then it will make more sense. Yeah. What did I write? Oops. Control Z can I do? No, it doesn't work with the Control Z. I've written here, approved, from the date of SOFP to the date of approved. Okay. It should be the date of approved. Now, this is being approved by whom? The directors, not the shareholders. Yeah. Okay, many of you have answered. So this is not the published. Definitely number 1 is not the answer. Favorable, unfavorable adjustment between the year and date, which is, and the date on which the shareholder approves. No, I don't think so. It's the directors they approve. Thank you. Ms. Haley Jordan has an option. Okay, favorable, unfavorable event occurs between the date of the, what is the year and date, yeah, and the date which the board of directors approves. That should be the best answer. Let's read the last one. Favorable, unfavorable occurs between the date of which the board of directors approve the financial statement and the date of, no, this is definitely not. Yeah, you can have a dilemma between these two. Directors, they approve. Yeah, they have the authority to do it. Shareholders, they have the voting rights, but not the approval right of the statements. Okay, so 3 is the answer. Definitely, we'll check the answer in a minute. B, distinguish between the event after the reporting period, adjusting event, and there is a non-adjusting event. So 1 and 2, that provides additional evidence condition existing the date of the financial statement supervision, and the second option is that occurred subsequent to the date of the statement of financial position. This is the best answer. This is basically a definition of adjusting events, existing the date of statement of financial position. Okay, adjusting event is then event that provides additional evidence of conditions existing at the date of the statement of financial position. So that's what you got to write, people. There is no option that you're going to choose like this. You need to write in your own words. So better you write now, not now in the lecture I'm doing, but you practice writing, adjusting event, non-adjusting. Okay, let's go to the non-adjusting event that do not exist at the date of the statement of financial position. That's it. You just need to memorize it. Okay. Non-adjusting event is an event that raises yeah, of course, within the, what do you call them? That relates to the condition that did not exist at the date of the statement of financial position. Did not is the key point here. And existing is the adjusting event. Conditions existing. You need to memorize and learn it by heart. Number C, explain the treatment of the losses arose from the fire. Now, those losses arose from the fire and the company constitute an adjusting or non-adjusting. This is, we already said, non-adjusting, you remember? Because the conditions did not exist. So that could be that the condition did not exist. That could be the answer at the date. Regarding the financial statement, they said select one option. 1, 2, 3 options are given. Regarding the financial statements, no adjustment to the financial statements is required. A full statement is required. Basically, no adjustment is required, but I said it a note required. Let's see the last one. What did they say? No adjustments to financial income required. However, due to materiality of the event, a note to the financial statement. That should be the answer, shouldn't it? Yeah, that's what, not the answer. You need to write it down in the exam script. Explain your treatment regarding the dividend is definitely non-adjusting without any doubt. So let's see. They said an entity recognize the liability. No, you cannot recognize it as a liability, and an adjustment shall be no, not that one. This one should be then. The entity shall not recognize. Yeah, shall not recognize. Then made the stamp financial position amount material as the amount is this material as well. We need to check one more time. The note should be included into the financial statement. Let's check it out. Was that a material amount? How much was the we don't know. They said 5p, but could be material. Yeah, could be material. This answer is a must to check. Let's check it out. So event after reporting date is an event that either favorable or unfavorable that occurs between the year-end date and the date of which the board of directors approves the financial statement. Yeah, it's the board of directors was the key point here. And obviously it happens between the year-end date and the date it is being approved. Adjusting event that provides additional evidence of conditions existing at the date of the statement of financial position, and non-adjusting erases after the look at this, after the year end they said, and at the date of the financial position. So these two are the key words. You need to keep it in your head. Yeah. Conditions did not exist. Also, obviously, did not exist and did exist makes the difference. And these things we have already said it, read it. All right. Yes, you need to put more emphasis on these two tasks. Task number 3 and 4. You must put a good emphasis and you must practice in advance. Your tutor can discuss it, but it's you need to write it, memorize it, and remember it and reproduce on the exam day. Hope it makes sense. Before going to the break, we can easily finish this question. I'm making it slightly bigger. Question number 5. Where does the question number 5 comes from? IFRS's International Financial Reporting Standards, whole chapter apart from the ratio analysis. For 15 marks, few nice, interesting questions. Some calculation can come here as well. So give me the good answers here. Within 5 minutes, we can finish it. The profit and loss on an item of plant or equipment, whatever, or non-current asset in short, will not affect the calculation of net cash flow from investing activities. Is it true or false? You know, cash flow statement question coming in. Profit on disposal will not affect the investing activities of your, what do you call it, cash flow statement. What do you think? True or false? Oh, I'm getting mixed answer. Acha, let me explain some things. Number one, it will definitely not affect, because in the investing activities, we do not take the profit or loss on disposal. You remember, investing activities, what do you take? Sold of the asset, disposal, or purchase of the asset. That's it. These are the two, or any other investing in a property planning. Profit on disposal or loss on disposal is a non-cash expense or income, non-cash item, we call it. Yeah, it is already shown into the operating profit or profit from operation, and it is adjusted into the cash flow operating activities. So it is not taken into the investing activities. It doesn't make any difference, nothing. Why? Because when you sold the asset, you got the whole money and recorded the whole money over there. So profit will not affect. So you got to remember this way. Don't worry, even if you're getting it wrong, but that's how you learn. There are plenty of scope to learn. How do you learn? Not just from the book, from question bank, from mock exams, from green light test, and from loads of practice. Reading. So this is going to be true. Yeah, this will not affect, definitely true. Reading number B, when conducting an impairment test, which of the following figures are needed? Okay, let's read the scenario now. Traders Limited is struggling to move its luxury goods in the current economic climate. Exactly like the pandemic, COVID-19. Nobody is looking for the luxury. Yeah, basic is all enough. Their going concern is not in question. Going concern is not a question. They're doing good, as their basic goods are still selling well. But the directors have decided that due to the virtually non-existence of sales of luxury goods, the production line of this goods have impaired. Now look at the question now. That's what the scenario was. When conducting impairment test, which of the following figures needed? Did you remember the impairment test? Yeah, carrying value definitely needed. Fair value less cost of the sales needed. Value in use absolutely needed. These are the three needed. What is the replacement cost? This is definitely nothing to do with the impairment test. Yeah. How do you do the impairment test? You compare your carrying value with your recoverable amount. Did you remember that one? Carrying value compared to your recoverable amount. Let's assume your carrying value is 500. You can recover 400. Tell me, is this an impairment or not? Tell me, write me. Carrying value or carrying amount or net book value, whatever you call, is 500 and you can recover 400. Is it impairment or not? Yes, thank you, Sylvia Hakan. Yes, impaired by £100. Now, this is an expense into the SPL, and your asset will be treated as 400. Now, how do you know it's 400? Now, you'll be given two options. Recoverable amount is the higher between two. Higher between VIU, value in use, and fair value, FVLCS, fair value less cost to sales, like this one and this one. Yeah, maybe the fair value less cost was 400 and this was 300. So we take the higher between these two. Higher, which one is higher? Fair value less selling cost is higher, 400. That is your recoverable amount. I gone a little extra mile. Maybe it might come in the exam, but this being already taught in our core lectures, so you can check our old videos from your portal. I hope you can get the answer. Oh, what is the answer here? 1, 2, 3, 1 to 4. Yeah, 1 to 4. This is the answer then. Yeah, first one. Reading the next one. Okay, stay tuned, people. We're going to take a break after this. Yeah, not before that, after this question. Andy leases an item, I-17, a plant on July 15, 2015. The present value of the future lease, present value of the future lease payments, present value is given 15,200, and Andy agreed to make an annual payment 5,000 for annual payment. Okay, that's all right. The rate of interest implicit, the lease is 12%. So on the 12%, you got to do on the money you agreed, present value of the figure. So what is the finance charge, profit loss? Easy answer going to be, yeah, what is the finance charge? 15,200 times by 12%. 1824. 1824. Agree with me, yeah? We do have an option here, 1824. You just need to do 12% on it. Yep. People, make sure you revise these very well and do these questions one more time, then you can master yourself. For D, reading this one, William prepares financial statements 30th June each year. The financial statements for the year ended 30th June 2012 were authorized. Okay, 30th June, authorized and issued July. Okay, great. The factory was flooded on July 22nd. Was it on 30th of June? Answer is no. Yeah, it was not on 30th of June. It was after. So I hope you know the answer. Severely disruption production. This means severely means it's definitely heavily. So at least a note is required. This must be classified as an adjusting event. What do you think? They said adjusting event. What do you think? True or false? Similar question have done. Yes, I agree with Mary Sylvia and everybody else. This is false. Thank you, Vivian, as well. This is definitely false. We had this type of discussion. So this is after non-adjusting. Okay. The following information relates to the item in inventory. Inventory should be valued at lower of cost or net realizable value. So the cost is given 74 and net realizable value. How do you get? Sales less selling cost, SC, sales related cost. Sales of the item is 82 and sales related cost is estimated cost of sales is 22 and estimated cost of completion. Whether cost of completion, whether little advertising, whether sales related direct cost, these are cost to the selling. So 19 should be taken away and 22 should be taken away. What do you get? 20, 41 take away from 82 is 41, sorry, 41. Thank you, Jordan. 41 should be the answer, right? We have one more last item here. And after that, we can check the answer. Poppy PLC owns a number of shares in Lily Limited. Nice names, isn't it? Poppy is the name of my one and only sister, the oldest. She's the oldest one. Okay, Poppy PLC believes that it should account for Lily Limited as an associate. Okay, now to be an associate, your shares should be less than 50%. Yeah, it could be 20 to 50%. And you do not consolidate, you just show it as an associate. Okay. I have seen somewhere that associate question doesn't come. Even we have done so many consolidation, associate doesn't come for calculation, but for the theory purpose, it might come. So which of the following are true for an associate? Should be consolidated, not. Associate, we do not consolidate. Should be equity accounted for. Yes, we take that into account. It should be shown, that percentage. Exists when a partner shareholding is between 20 to 50%. That falls under the definition. It should be less than 50%, but mostly more than 20% that we can influence. When accounting for associate, it is important to calculate the disclosed non-controlling. No, we don't need to do any NCI. Yeah, we don't need to do any non-controlling interest. So what is the one we got? Yeah, this is 2 and 3 only I can find out. So 1 is the answer. First one is the answer. All right. So can you see for your 15 marks, you had to remember so many things. Yeah. Let's check the answer now. Question number 5. It was true. Was it true? We have said true. Yeah, true. And then first one is second one is A. 1824 was right. 41 was right, and that was A as well. Well, it can appear on the screen now. It's our break time, but please write your full name now. Everybody, write down your full name. We're going to take 25 minutes break today, not a long one. 25 minutes break. So I'm going to take a picture of those people are present today. Some of you already said that they can't attend. They're going to watch the recorded video. Okay, write your full name. I'm going to see you at 12, yeah? Let's break a little bit here. Today is our last class. So it's our break time. See you at 12. Then I'm going to give you some work to do. Okay, so goodbye now. Hello and welcome. We're back after the break. Who is there? Who is back? You can say hello to me if you are back. It's 12 o'clock. As we promised. Yeah, good to see Vivian, Hakan, Sylvia. Many of you are here. Very good to see you. We promised to be back by 12. We are back by 12. All right. Welcome back, Abi. So we have done until question number 5. Yeah. Putting my video again off. Yeah, everybody's video off. That's not mandatory. The voice should be good. Number 6. Yeah, group accounts. SPL, SOFP, both of these we're going to do. All right. Under sort of 30 marks, consolidated state of financial position and statement of profit and loss. Well, task number 6. You have been asked to assist in the preparation of consolidated accounts of Jack group set out below, or the financial state of financial position. This looks like an SOFP. Jack is the parent. Dino Limited is subsidiary. So property, plant and equipment is given. Investment in Dino, 5,000. And share capital, share premium, retained earnings. So this two ain't gonna go, but we will check the goodwill calculation. We need this information. Then non-controlling interest at acquisition, non-controlling interest year end, we need this information. All liabilities, current, non-current, given, current, given. We just added these things. What is the requirement before I read the further information? Given it further information, I'd like to read the requirements. Prepare the consolidated statement of financial position. That's great. We know what to do. So there will be few workings you need to do, especially working number 1 is about your goodwill. Yeah. I hope you remember. Retained earnings, a little bit you got to do here. The controlling how much you control. Non-controlling interest at the acquisition and non-controlling interest at the year end. So these are the 4 workings we need to do. And I believe after that, or this is a separate question, by the way, and you need to do an SPLC. Let's quickly check both of it together. No problem with that. Workings revenue or cost of sales. And that's it. Intercompany transactions could be there if there is a sale from a parent to subsidiary or subsidiary parent. I hope you remember. If you have forgotten, I will bring those points back here. Okay, now let's keep checking the question. We have checked the balance sheet, state of financial position already. I'd like to go over with the further information. 1, 2, 3, 4. Yeah, 4 further information given. Number 1, the share capital of both Jack Limited and Dino Limited consists of ordinary share 1. There have been no changes in the balance of the share capital, the share premium, no changes. No dividends were paid or proposed. Okay, that's simple. Whatever at the beginning, that was at the end as well. So share capital, share premium, unchanged from the subsidiaries point of view as well. Jack Limited acquires 60% issued share capital of Dino. So P acquires 60% of S subsidiary. That's the group structure. 30th September 2010, the balance, the retained earnings. Okay, 30th September 2010. What is the balance sheet here? 30th September 2011. Yeah, so that is year end. You agree with me? 30th September 2011 is year end, and 30th September 2010 is opening. Opening retained earning is given 5450. These are already in thousand, so ignoring the 000. 5450. This is opening. How much is your closing retained earning for Dino? It is where here about 6250. Yeah. Thank you, Hakan. Welcome back, Mary. Okay. So isn't it good to check how much is the increase into the retained earnings? Yeah, how much is the increase in the retained earnings after post acquisition? So let's do it. 6250 was at the year end, and at the year start was 5450, 800. Yeah, so 800 is increase. So of that 800, what percentage belongs to the parent? 60%, right? Just keep remember it. We might need to take it. We have to need to take it into the retained earnings. Yeah. So we can do the retained earnings workings. They might have given us did they? Retained earnings. Yes, great. Retained earnings. Let's quickly. Okay, let's finish the question first, then I'll do it. One more point I can see over there. The fair value of the property, plant, equipment of Dino at the beginning, opening 2010, and everything is opening. So property, plant, and equipment was 3652. Ignore 3652. Compared to the book value, fair value, comparing with the book value is 3052. In the book, it was written 3052, but the fair value 3652. 600 has gone up, fair value. If you do the revaluation, it's a revaluation gain. It's a revaluation gain, and it is already at the beginning. Can you see 2010? It is already at the beginning. So a percentage of that gain, we need to work it out in doing the non-controlling interest. All right, and it's gonna go into the goodwill as well. We'll show you every bit of it. So what did we can go top-down approach, not a problem with that, or anything we choose and pick. So let's do the top-down approach. Goodwill started with the workings. Price paid. Now, good thing is they have written it. Very often they don't write all these writings for you, so you need to remember it. Price paid. How much you paid? Do you remember? Who remembers how much you paid? What is the consideration? Investment. Let me show you. There's the one. Investment in Dinos, 5,000. Okay, 5,000 we paid. Parents has paid. We means we are parents. I'm saying, parents has paid 5,000 to acquire the subsidiary for the 60%. So 5,000 it is being paid, people. This 5,000 is paid for the share capital, share premium, retained earnings at the beginning, and share of revaluation. You know, the revaluation was how much was that would be. Just 1 minute. Okay. All right. Revaluation gain was 600, wasn't it? Revaluation gain was 600. So I'd like to do the percentage of it right now. Can you please do the percentage? 60% of 600. I'm taking the calculator on the screen. 600 times by 60%. 360. Yeah, 360. 60% is 360, and 40%, which is not controlled by, minus 600. If we do 240. These figures are needed, people. Okay, so let's go to the goodwill again. Although we paid 5,000, but was the business worth of 5,000? How much was the share capital, share premium, and even the retained earnings? Share capital was 1,000. You remember? Look at this here. I should take that to 1,000, then 400. I'm taking it. 1,000. 400. 1,000 was share capital. Share premium was 400. Of this, generally you do, what percentage we acquired? We have acquired 60%, doesn't it? So we got to take the 60% of these things. 1,000, 60% gives you 600. Agree with me? Yeah, 600. These figures will be minus, basically comparing, yeah, to get the end value. Share premium, 60% of 400 is, you can do on the screen calculator, 400 times by 60%, 240. Thank you for the good calculation, Vivian. 240 would be taken away. Retained earnings. How much was the retained earnings? It was at the beginning. At the beginning, we got to take into account, yeah? Retained earnings. At the beginning, it was, we have worked it out, 5450. 5450 times by 60%. Yeah, let me write it down. 5450. Yeah, what did you get? 3270. 3270. Thank you for the calculation. It stays in front of me, so it helps me. And share of revaluation, 60% of that was we have already calculated. Share of revaluation at the beginning of the year. Yeah. This is the one. 360. This revaluation gain taken place at the beginning, and 60% gives you 360. Revaluation gain is 360. 360. Now, people, all of you need to take away. Yeah, all of you need to take away. Minus, 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 minus. So, although we paid 5,000, but the worth of the business was this. Do it and give me a figure. Yeah, 5,000 we paid it, but the worth of the business is added up of 600, 240, to 3270. I'm getting some answer. 530. I hope I'll get that. 530. Yeah, 530 is the goodwill. 530. We have paid 530 extra. Thank you, everybody. Jesse, Vivian, Charlotte, Mary, and everybody. Those of you have worked out already. Send me the answers, and answers are already at the top. I can't see many of your answers. Okay, that is your goodwill. All right. All right. Now let's do the retained earnings. So parents' retained earnings, we're going to copy paste, and subsidiary retained earnings. You know, the difference we found, maybe 800 we found, you know, 800 I remember. Of that, 60% you're going to take it. Of that, 60% we're going to take it. I'll show you. Let's check out the parent retained earnings. How much is the parents' retained earning? 13,080. Yeah. Take it straight. 13,080, not 15, 13. And then what was the change into the retained earnings? At the end, it went up 6 to something I saw. Okay. Still nose blowing. 6250, yeah, and 5450. 6250. 6250 minus 5450. How much was the increase? I believe it's 800, wasn't it? 6250 minus 5450. 800. Yeah, that 800, if you do 60%, 480. That is the group retained earning, 480. Now 480 plus 13,080, how much it is? Can someone give me the figure? 13,080. What did I get? 13,560. Thank you. Thank you, people. Baby and Charlotte, Mary. Thank you. 13,560. 13,560. See the hard work we're doing already here. Okay. Thank you, everybody. Non-controlling interest at acquisition and at the year end. So, you know, all of it we have done here. Again, all these things, we don't control 40%. You remember? We don't control 40%. At the beginning, how much was the share capital? £1,000, yeah, of your subsidiary. How much was the share premium? I'm taking the answers from here. For 400. And retained earnings was 5450. 5450. And share of revaluation was 600, wasn't it? Yeah, share of revaluation 600, but that 40%. So all this figure added up, you can take 40%, or they have taken individual. That's why you can take individually. 400 is here. 4,400. Then this 400 times by 40%, how much you get? 400 times by 40%, 160 I got for share premium. Then retained earnings 5450 times by 40% we don't own, 2180, and 600 times by we have already found that at the top. I forgot, but 600 times by 40% is 240. Yeah, I remember now. 240 for revaluation. So at the beginning, that was the worth of the asset, which we don't control, non-controlling interest at acquisition. Yeah, add up and get me a figure. Let's add up. You can add up as well. 240 plus 2180 plus 160. Yeah. 160 plus 400. Fantastic, Vivian, Mary. It's 2980. Same identical answer, 2980. Now at the year end. At the year end, only one change. Everything is same like at the acquisition, only one change. That is your retained earnings, right? Retained earnings. Now, Share capital, we can copy it like here, 400, then 160, then only retain and exchange I'll show you, then 240. How much is the retain and get the closing? 6 something, 62 is given into the balance sheet. Oh yeah, that's how you can take 6250. 6250, I'm gonna do it. I'm gonna take the 40% of it. Do it. 6250 times by 40% to 500. I hope it makes sense. Yeah. Year end, post acquisition we're doing. 6250, 40%. 2,500 I found it. In short, again, everything is 40%, but what are the figures? 1,000, 400, 6250 is the changed figure because that has changed, gone up, and 600. Add up and get me a figure, post-acquisition figure, which you need to take 2,500 plus 240 plus 160 plus 400, 3300. Is it correct? Can you please work it out? Thank you, Mary. Jesse, thank you. Thank you. That gives me, Mithaili, thank you. Like confidence on your work that yes, you have worked correctly. And I believe that's it. We can take this figure into our statement of financial position. You need to help me in doing this. 530 is the goodwill, and just non-current asset. Non-current asset. So better like let's do like this way, yeah? Let's do this way. And yeah. We have done all the questions. I'm going question number 6. We have a goodwill. At first, I'd like to write that goodwill first here. So it's a GW and we have worked it out and it's 530. Yep. Now, after that, we have a property, plant and equipment investment. Obviously, you don't take, but PPE, property, plant and equipment. Remember, there's a revaluation reserve. 600 would be added because the valuation going up. This plus that plus 600 equals to should be the figure. Can someone give me the figure? Already some of you are giving me figures. 25506, Vivian says. Do you agree with Vivian? PPE is, thank you, Mary, 25506, right? So let me just double check. Yeah, doing little extra work is good. 04 plus 6802 plus 600 to 5506. Fantastic. I can't say same as well. All right. So there's no more non-current asset. You can add up and get a figure. What do you get, by the way? Tell me. 26036. I'm taking your answer. I hope. Thank you, people. 26036. Okay. Why is this? Oh, again, I have done. You see, goodwill should have been here, 530. PP should have been here. And don't do the total should have been here, shouldn't he? Yeah, don't do this type of mistake. So you can put in the correct box, right? Anyway, current assets is a straight add up. Where is our current asset? Total current, there you go. These two add up. Give me a figure, 4852, current asset, 4852 plus 2395. 2395. Give me a figure, please. 7247. Is it correct? 7247. Thank you, everybody. That is correct. Okay, add up and get me the total asset then with your non-current asset. Add up. Give me the total asset. Who works it out? 747 is correct. Yeah, 7247 plus 26036. 33283. Thank you. 33283. Excellent. Good people are working there. I love your enthusiasm. Very well done. Okay, that's your net assets. Total assets should equal to total equity and liability. Let's see whether it does or not. In the equity, we have share capital, share premium, yeah, retain earnings, share capital P only, share premium P only, yeah, parents only. So 5 and 3,000. Do remember 5. No, I should write here. I shouldn't do that mistake. 5,000, 3,000, Retained earnings we have worked out. You remember? Non-controlling interest is given. We're going to take anyway. Retained earnings. How much was the retained earnings? Can someone give me the figure? We have worked out at the bottom. Where about? Oh, there we go. 13,560. Yeah. Thank you, Mary Vivian. 13,560. 13,560. And non-controlling interest we have worked out, but this is the post-acquisition, right? How much was that? Year-end. How much was that? Year-end is 3300. Thank you, Vivian, Mary, and everybody. 3300. I found it. 3300. Now this box is given just to add up these things. Can you please add up share capital, share premium, retained earnings, non-controlling interest, and add up and give me the figure how much you got that figure for? 24860. Is it? Mary says 24860. Thank you. Vivian says same. So 24860. Okay. Thank you, Hakan as well. Thanks for you people. Good answer. Okay, non-current liability. Do you have any? Non-current, we do have couple, 4500 and 1000. So 500 plus 1000. It's easy to do mental maths. 5500. Yeah. 5500. Okay, current liability is this. Add up and give me a figure for that current liability. Yeah, the is 2376 plus 547. So Vivian says 2923. Can I take Vivian's answer? 2923. Okay, thank you. 23. Mary says same thing, so I can take Vivian's answer. All right, great. Total liabilities. So this 2 gives you total liabilities, right? Give me that figure, please. What is your total liabilities? 55002984 8423. Yeah, 8423. 8423 it should be okay. 8423. Now liabilities and equity, when you add up, do you get the total liability and equity, which is 33283? Do you add up and give me the figure? I'll do it here as well. Ian says yes, then it should be yes. 24860 plus 8423. 8423. I got 33283 exactly. 33283. Now you can dance again. That means your work is good. Yeah, in the exam day, you should feel comfortable. Like you can say, yeah, well done. It has been done. And it has balanced, in short. So we are not in doubt, not at risk. All right, let's check the answer now. We don't need to though, but 33283, 33283, yes, right? 33283, yeah, go. Very well done. That was superb. Good job. We can move to the next question. It's the same question, by the way, not the next question, but you're going to do an SPL now. Yeah. It's a different, same question, question number 6, but it's a different scenario. Harry PLC. Acquired 75% of Sally Limited. 1st of January 2010. Okay, today I'm a little ill. It's as you can feel, and yeah, I'm sorry as well. Well, don't worry, we are left with few more stuff, so I hope we finish good. We finish well. Okay, we are still enthusiastic. Don't worry, we're full on energy. Extracts from the statement of profit and loss for the year ended 31st December 2011. Harry and Sally given. Harry is the parent, Sally is the subsidiary. Sales, cost of sales, gross profit, other income, dividend. So dividend doesn't count into the, it doesn't come, it's the intercompany. Other expenses or finance charge, taxation, it's just all add up, doesn't it? Yeah. It's all about adding up. Okay, let's read the further information. Very important, right? During the year, Sally Limited sold goods to Harry PLC. 300,000. Who remembers? If you sell it, what do you do? Minus from sales, minus from cost of goods sold. Yeah, that's what you do, don't you? So that's what we're going to do here. And with a cost of 210,000, that means they made a profit of 90,000. doesn't he? Let's read if we find any unrealized profit. Harry PLC still has 1/3 of the goods on hand. That means 1/3 of the goods are not sold. That means 1/3 of the profit is unsold and unrealized. Divided by 3. You should get 30, don't you? Yeah. 30,000 is PUP. Who is selling to whom? Yes, fantastic, Hakan. Thanks for reminding us the double entry. Cost of goods sold. You add this PUP with cost of goods sold or cost of sales, and you deduct from the inventory, closing inventory. Okay, that's definitely true. But who is selling to whom? This time, subsidiary is selling to parents. Fantastic, Vivian. Subsidiary is selling to parents. So what is an extra work you need to do? Tell me. Yes, superb. NCI. You need to minus from the profit of the NCI, non-controlling interest. When doing the NCI, you need to minus it. We will show you. Let's do the question now. Now, we got to do the SPL. Okay. Excuse me. Oh, okay. And there are a couple of activities. Okay. Okay, I just did a big sneeze, but I needed to mute it again. Whenever you see a mute, it's a sneeze. Okay. Oh, thanks for the blessings. I don't know. Is it a hay fever? Paracetamol with lemon tea. Oh, thank you. I need that. I need that lemon tea. I remember it happened last year, June. Okay. Okay. Oh, not activities, workings. Yeah. We got to do a few workings. Let's do it. Okay. Would you like to do it for me? Can you do this? This one. I'll give you 10 minutes. I think you can give me the figure profit here. 12 minutes. Okay. 12 minutes. It's your turn. Do some work. Yeah. Meanwhile, I'll take a little rest and sneezing, like that. Okay, so you already got the question with you. If you need to take a picture, I'm giving some time. Take a picture. 1, 2, 3. I hope the picture is taken. I'll give you 12 minutes, as I said, to do the whole question. Then I'll come back and do as much as you can do it. Yeah, do the workings at least. Then take a picture of this and this. That's it. Do the answer here. Okay. Please do the answer here. Your TikTok is here. 12 minutes. Yeah. Get ready and do it well and give me the answer. Half of the time gone. Have you got some answer already for at least sales, cost of sales, and PUP? I have done the PUP, by the way. What is the gross profit? Write me. Come on, go ahead. Are you lazy fellows there? Okay, let this, okay, fantastic. Abby, Vivian, lovely people are there. 18970. They say it 18970. How did they say it? Because they have worked out the revenue minus worked out the cost of goods sold. So in the revenue, okay, I need to do it this way. Thank you, Jesse. I need to do this way. Okay. Yeah, Harry and Sally. Hold on, let me put it bottom. What is the revenue of Harry? It's 50,000, yeah, 50,000. And Sally is 30,000 on the right hand side. You can see 30,000. Intercompany is how much? How much is the intercompany? 300, wasn't it? 300 sales. Thank you, Vivian. 300. When you take away, what do you get for your revenue? For your revenue, 50,000 plus 30,000, 80,000 minus 300 is 79,700. Fantastic. 79,700. Okay, what is the cost of goods sold? Cost 40 and 21, isn't it? 40, 21. But there is a PUP, provision for unrealized profit, that should be added to the cost of goods sold, which is 30, we found it, and intercompany is 300, should be taken in. What is the added up figure? What do you get? 6940, thank you. 6730? I'm getting different answers. Vivian says 6730 and Hakan says slightly different. Maybe, I don't know. 40,000 plus 40, yes, 40,000 plus 21,000 plus 61 plus 30 minus 300, 6730. Vivian, you're right. Hakan, how did you get that figure? 6940. 6730 is right. 6730. I can work it out one more time. Yeah. Anyway, and they have taken these two figures at the top. Thus, they got the right answer. 69,700 for sales. Sorry, 79,700. Yeah. And 6730. Thus, they got gross profit. Other expenses is nothing but adding up. Yeah. Other expenses 2 plus 5,300. Isn't it? How much is that? 7,300, right? What is this? Not here. Other expenses are here. Yeah. 7,300. Thank you. Okay. Profit from operation. How much is the profit from operation? From that figure, 8970 people said, minus 7,300, 11,670. Agree with me? 11,670. Thank you. Thank you. All right. Then finance cost is nothing but adding up. I didn't see anything else here. The finance charges 2 plus 1,500. 2,000 plus 1,500. 3,500, right? How much is your profit before tax? How much is the profit before tax minus 53,500? 8170. I hope you get the same figure. Other people participate as well. Taxation again added up both of it, take away. Taxation 2750, 200. 750, 200, then 29550, isn't it? 2950. How much is profit for the year? 5220, agree? Now, attributable to equity holders and non-controlling interest. It's 2000, you remember? We would start with the non-controlling interest. The 2000, normally, non-controlling is 25% in this question because 75% you own, then 25% you don't. So, do you do 25% on 2000? Answer is no, because subsidiary is selling to parent. So, from the NCI, the PUP will be taken away. PUP 30 is taken away. Then you can do it. Let's do it. 2000 minus 30, sorry. 30 times by 25%. I got 492, 93 I will take. 493, yeah? 493 is your 493 is your non-controlling interest. So 5220 minus 493 attributable to equity holder is 4727. That's the end of the question. Thank you, Mary, Jessie, Vivian, Hakan, for your lovely, superb, Sylvia, everybody. Good participation. Now, let's check the answer from this question. These were fine anyway. We checked it before. Question number, this is Harry PLC. Yes, look at this. 490. These two are correct. This is correct. Everything is correct. Very well done. So that big 30 chunk of marks into your pocket. Now we are aiming for the 20 marks of calculation from ratio analysis and 23 from the interpretation of the ratio. Yeah, interpretation. Interpretation means like explanation of the ratio, written question. Okay, so question number 7. I'm revealing question number 7 in front of you, which is a ratio analysis question. Let's see how much of the formulas you remember. Now you have given it SPL, income expense information, SOFP given. Yeah, and you must be asked for some ratios. Gross profit ratio. So formula is GP over sales, yeah, or revenue, times by 100%, because it's going to give you in terms of percentage. Calculation we're going to do in a minute. Operating profit percentage, profit from operation or operating profit, OP divided by revenue, times by 100%. Agree with me, yeah? Return on capital employed, again, operating profit divided by equity plus, who remembers? Non-current liability, yeah? Thank you, NCL, yeah. Equity plus non-current liability. So equity is owner's equity, non-current liability is another finance from other people, all of it against your capital. So we consider these as your capital. How much is the profit? All of these, the higher, the better, right? Current ratio. Now these three are percentage. Current ratio, net asset turnover, even these two are a ratio. Current asset over current liability, isn't it? Net asset is not asset turnover, it is net asset. So what is the formula? Sales or revenue divided by total assets minus current liability. You need to remember this one for net asset. Yeah, it is a net. Do remember. You have to learn it by heart to pass it well in the exam. Yeah, if you don't remember it, you'll be looking for the answer here and there. Interest cover. So how many times the profit can cover the interest? Operating profit divided by interest or finance cost. Finance cost or interest. Gearing ratio, debt over equity. You remember? Debt over equity means non-current liability divided by debt over debt plus equity, basically for your exam. Non-current liability divided by equity plus non-current liability, NCL, non-current liability. That's it. You remember this, you can find it. Okay, I will check your knowledge here Calculate the ratios of the nearest 1 decimal point. Now, if they tell us to 1 decimal, we will try to follow this one. Can you please give me the answer for operating profit percentage? What is the answer for operating profit percentage? I'm taking you here. Yeah, you can find the answer from this SPL. Operating profit percentage. Give me that percentage. Then I will check it. Let's see who gets the right answer. What percentage? 10%, 20%, 90%, 100%. Do it. Operating profit percentage. Do on your calculator and tell me the figure. What did you get? Operating profit percentage? Taking too long time. 65%. Vivian, operating profit percentage. Are you sure? That's so big. Normally, gross profit is that much big generally. Not even more than 30%. Anything is wow bigger. Okay, come on. What is the formula operating profit percentage? I didn't ask you for the first one. I asked you for the second one. Operating profit percentage. Operating profit divided by sales. Operating profit is how much? 1251, and sales means revenue. 4315. Yeah, just apply it. 1251 divided by 4315 times by 100. So 29%. I'll take the answer. 28.99 means 29%. Okay. Okay. That's great. I hope it makes sense. It was just a random check. 29%. Of course, I know you can do it. I'm checking another one. Interest cover. I'll not do everything for you. I'll reveal the answer in a minute. Interest cover. What is the? It's going to be in terms of times. How many times you can cover? The more, the better. Okay. Interest cover. How many times you can cover the interest? You see, I've written the formula for you already. Operating profit divided by finance cost or interest. Yeah, do it then. Again from the SPL. Operating profit is given and the finance cost is given as well. 27.8. All right. Thank you, Vivian. 1251 divided by 45. Absolutely. 1251 divided by 45. As simple as it is. So it's a very good, like almost 29 times they can cover because they said 1 decimal places. We're going to take it 1 decimal places. Yeah. So if you do 1251 operating profit divided by interest, which is 45 of finance cost, you're going to get 20 equals to 27.8. We're going to take exactly times, right? The more, the better. Gearing the less, the better. Yeah. It was a highly geared business. No good. It's a risky business. Okay. So I hope you can get all the answers like this way, revealing the answer for you. This is the formulas we have done. And this is the copy paste, like gross profit divided by sales, you get 65%. Operating profit divided by sales, operating profit percentage. ROC, see, equity, you take it from SOFP. And this is non-current liability, SOFP. Where it is given in the question. You just explore the question. That's your long-term liability, 500. Where is your equity? This is the total of your equity, yeah? Share capital, share premium if there is any retained earnings. Yeah, there is a revaluation reserve. So 7930. Plus 500. All these three, the higher the better. Current ratio is 2 to 1. It's very good. Yeah. Interest net asset turnover. So how much you're selling compared to your asset, which is not bad, good one. And interest is too much high, not bad. They said it in terms of ratio. You can do in terms of percentage as well, but anything is okay with the gearing. The less is the best. This business is very less geared, very less geared. They don't have that much of loan. The equity is higher, right? Super duper well done. Now we are moving to the last question, task number 8. Ratio analysis, but describe it. Yeah. Let's go to the question number 8, task number 8. I like to read the requirement first. I can see there's some information, but let's read the requirement. Prepare a report. Yeah, it's a report. So they already give you in the exam, it will not be given. You need to write a report. Then everything you need to write. They give you an option. Yeah, so you need to write everything. A and B. Let's read the A. Compare the cash management of the 2 companies based on the ratios provided. So there are 2 companies I can see, Bethany and Carol. 2 companies are given. Are they doing good or bad? We need to talk a lot. All right. Depends on how much marks are there. each valid line gives you 1 mark. Number B gives you give your advice on which is the company the better cash management. See, they're talking about cash management. That means current ratio, receivables, payables, working capital cycle, interest cover. They're talking about these things. Yeah. Therefore, should be invested in by Andrea. Where Andrea should invest. Before I reveal the answer, let's read this. Andrea is considering buying shares in Bethany Limited or Carol Limited. Both companies are in the entertainment industry and appear to be good investments. Both companies are managed very differently. I'm making it a little bigger. And Andrea is concerned about their cash flow. Okay. They're maintaining very differently. We are Andrea, let's assume, cash flow. She has calculated the following ratios and asked your advice. As they are both supplying services, they hold negligible inventory. Basically, they don't have enough inventory, so don't bother about it. So look at this. Bethany has current ratio 1.5 to 1 and Carol has 1 to 1. Obviously, Bethany is better, right? Bethany has more current asset compared to Carol. Write it down and talk about this one. I'm going to reveal the model answer in a minute. Receivables collection period 35 days, 60 days. So without any doubt, Bethany is doing very good in terms of cash collection from the receivables compared to Carol. Carol credit controlling is very bad and one is stuck with receivables. So cash management is bad with them. Payables 32 and 30, both of them are similar. So 1 month credit is generally allowable, which is not much. 2 days does not make that much difference. You can talk about both of these are similar, no problem. Interest cover 10 times for Bethany. Carol is a big problem. Carol's profit is less, could be, or Carol liabilities are too high, isn't it? That's why they cannot, because they're paying interest, a high interest. They can't even cover 1 time, whereas Bethany can cover. So all these things you need to write in a report format, revealing the answer for you. Although the model answer slightly was given up there. Report 2, Andrea, from a student. I'd like to read the requirement one more time. Compare cash flow companies and the ratios provided. Give you advice which the company, the better cash management, therefore should be invested by the Andrea. Okay, so all right, that's how you're going to write. You're writing to Andrea because you're a student from a student. Subject comparison on Bethany Limited and Carol Limited. You can take it from the question itself, yeah? Because you're comparing and giving advice. Date, whatever the date given. If not, exam date is the date. This report has been prepared at your request and it compares the cash management of Bethany and Carol. I already had my discussion here, but let's see the good answers, model answers, which you need to check out all the time. Many more of these answers. Comparison of the cash management of the 2 companies based on the ratios provided. Current ratio. Bethany Limited has better current ratio. Both ratios are still acceptable. 1:1 is still acceptable. Yeah, both companies will be able to pay their debts when they fall due, but still you can write Bethany is better. Yeah, we have written it here. Bethany is better. And to be very honest, 2:1 is the standard. But for their type of business, maybe 1:1 is fine. So both of them still can repay, but Bethany can repay with flying colors without any hesitation. Receivables collection by Bethany has a lower receivables period. This shows the management of the Bethany more efficient, as we said, in debt collection. Bethany Limited should therefore be more liquid. You can write still about the Carol, write about Carol. You can expect marks on that. Whereas Carol is taking long time, their cash management is not good. Payables payment period. Both companies take about 1 month pay their creditors, ensuring that creditor goodwill is maintained. That's definitely good. Nothing wrong with that. If we combine the receivables collection period, payables period, we can get an indication of the working capital cycle. Yeah, you can bring that to, in it here. Because the inventory and negligence, we don't talk about it, has much better working capital, 3 days, whereas Carol's has 30 days. Carol Limited will need to finance 1 month payables. You see, because of the payables, Carol's money is not, they're not getting money quickly from the payables, from the receivables. That's why working capital cycle is not good for Carol. Interest cover. Bethany Limited can more than pay the interest payments when they fall due. You know, it is 10 times and the other one is only 1 time you can talk about. let's see, in fact, you're reading Carol Limited is in a much more difficult situation where they are not making enough profit to cover the interest. Perhaps this will call the loan company to recall the loan. If they ask for the loan back, they will be in a bad position in terms of cash flow. What is your advice? Obviously with Bethany, isn't it? Based on my above analysis, I would say Bethany Limited's cash management is much better than Carol's. As such, I would recommend that you invest in them. And that's it. In the question, basically, they try to give you the options. The earlier we have done it, but in the exam, you need to write thoroughly in detail.